Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
If you have any questions about mortgages or real estate, give us a call at 521-TALK. That's 521-8255.
Or text 1-800-580-CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
And away we go, the last day of summer.
Is it the last day of summer?
Wow. Yes, it is.
Well, the good news is going to be a beautiful day.
It's going to be a gorgeous day.
Absolutely.
8:44 tomorrow morning, it's fall.
It's been incredible last 10 days, and I think we've got another 4 or 5 days of this outstanding weather. I happen to be
we're raining Monday. We're starting to rain.
Yeah, but
Monday.
the warmth, they say,
the
continues through September and into October.
Awesome.
Yeah. We were in, I was in Muskoka's with the lender for a conference last 3 days, and couldn't believe how warm it was there. Like it's crazy. Like on the boat with shorts and a short sleeve shirt. Incredible.
The weather is always great for the market, that's for sure, right? Anytime the weather's warm and it stays warm, people have that optimism and they want to shop for properties, and it's nice to see that we're going to continue on into October for warm weather.
Boy, there's no shortage of good news for the market this week.
Yeah, I mean,
what a week, eh?
Yeah, great news.
What a week.
However, to be honest with you, I'll let Frank, talk about what happened with the mortgages and that, but it didn't do much for the market, put it that way.
Not yet.
No, not yet. I mean, we are going to see it, and I've been saying that, and especially with the rate announcement coming in October, sorry. But I felt last week, I mean, Greg, you can chime in if you want as far as, activity, but it was very slow last week in the way of listings were not moving last week.
I bet you the spring market starts at the end of December this year.
It very well could. I mean, we had a delayed spring market in this year that really went into the summer market. And then, we're seeing a little bit of a slow market. I think we might start to pick up. Maybe our fall market is a little bit delayed as well, right? Hockey starting, sports are starting, schools starting. We might see a little bit of delay in our fall market. And I don't know, Greg, how are the shoots? Are you busy with listings right now?
Well, year over year, definitely. I'm well up. We're way over what we shot last September.
Absolutely.
And we still got 10 days left to go in the month. So
yeah. The sales is where I feel like it's really slowed this week, compared to what we were last week to this week. It was like, we did tons of price reductions this week to get our listings sold. And it's, we're in a bit of a finicky market right now where, we've had sellers say, well, why should I put my home on the market right now? You're saying that the market's going to get better as we go.
So will competition, though.
Well, so will competition. There's going to be a lot more competition on the market. We're looking at buyers right now. There's lots of buyers that are anticipating, like we've talked about for weeks, they're anticipating rates to skyrocket down. So come down. And
Not a lot of people are okay.
Well, hold on. Let me continue my thought. Before I get interrupted again, let me continue my thought. What we're seeing is the rates are going to go down. And so buyers, I think, are jumping the line. They're starting to anticipate rates are going down. Let's jump the line. So I'm saying to sellers, would you rather have your house on the market right now when buyers are coming back into the market, or would you rather wait till spring, which is obviously one of our more popular markets? Would you rather wait till spring when, yes, we're going to have lots of buyers in the market, but you're going to have lots of competition? We might only have 7 homes in your area that are competition. In spring, we might have 22 homes.
And there will be more competition for buyers, too.
There will be more competition for buyers. So, we're going to see more buyers hitting the market, which will be great news in spring, but you're going to have more competition. I've always said, when's the best time to sell your home? In what market? There is no bad market. You sell in a winter market, and yes, there's less buyers, but there's less competition. You sell in a spring market, which is our popular market. Yes, there's more buyers, but there's more competition. So there's no bad market. But what I'm saying is, buyers, it's time to get in. Sellers, it's a good time also to have your house on the market because buyers are starting to come in with rates going down. So get your house on the market and buyers start buying.
And if you are getting in, you better go adjustable.
I think so.
Especially now after what's going on this week and what we think is going to happen in October and December.
Yeah, we've seen some fixed rates come down very moderately. Certainly nothing close to what we're going to see with the prime rate. The question is, will fixed rates go at the same pace? And the likelihood is no, because I think there's going to be super aggressive rate cuts. If I had to make a bold prediction, I would say that all three, October 23rd, December 11th, and January 29th, will probably see Canada drop their prime rate by 0.5 point each time. And
is that even bold right now, though, Frank?
Well, I think it's bold from a standpoint of Canada's typically a very conservative Tiff Macklem's been extremely conservative, a quarter point here, quarter point there.
He wasn't very conservative when he raised them.
No, he wasn't, but he had no choice because inflation got away.
Too much too quick, right?
He probably did. In hindsight of 2020, he would have started them sooner and wouldn't have had to do what he did. But he did what he did. But now I think he'll take the reverse role now, where he started off conservatively, make sure the Canadian dollar would remain strong, which it did. And now we saw the U.S. this week. I mean, the U.S. dropped a half a point, and that's significant. That doesn't happen very easily in the U.S. So for them to drop half a point, then not only did they drop half a point, they hinted that there's more drops coming already. Yeah. So that was key, and not to mention Tiff Macklem did the same thing. In September, he said, we actually considered 50 basis points in September. So now they have no reason not to do the 50 points in October, not to mention inflation. We saw the inflation numbers come out at 2%. This is something, you read the article. I mean, they predicted when?
Well, this year they predicted 2.6%. Next year they thought we would be at 2.4%, and not until 2026 did they think we would be this low.
Right. So here we are. We're still not even at the end. We're 2/3 the way into 2024, and we're already at that 2% mark. And there's a chance we could be below 2% the next reading if gas prices continue to stay where they are.
Where are we at for recession?
Oil prices. So, well, again,
we're in a recession. We're totally in a recession right now.
Who interrupted who? It's funny, when it's one way.
Well, listen, is Frank the master on whether we're in a recession or not? We're in a recession. I don't care what they say. We're in a recession, and it's
Canadians will say that.
Canadians will say that. Yeah,
yes,
absolutely.
Most Canadians are saying that.
But if you say, let's say in the next 4 months, Frank is saying the bold prediction, which some would say it's bold. Some would say after the States went down half a point, it's not quite as bold. But if we follow...
But he's talking about 3 in a row.
I know. But we've already... Tiff Macklin's already... Well, CIBC's already come out and said, Tiff said that in December and January we're going down half and half. So there's a point there, plus another half a point in October. We go down 1.5 points in the next 4 months. Buyers, I'd get in now because I think we're going to start to take off, and not like we saw in 2022, but I think we're going to see sort of a mini version of what we saw in 2022 where prices will go up. And listen, Frank agrees and I agree, I don't want to see prices skyrocket. I would like to see some affordability for young people to get into this market. And if it skyrockets like it did in 2022, I remember talking to some people are saying, how are my kids ever going to get into this market? Yeah. They're still saying that. But so if we see that again, it's not good for real estate. It's not good for the market. It's not good for consumers.
Skyrocketing for Ottawa now? It's not 2022 is not going to happen again.
Well, last year, of course, we went down 5.5%. That's the first time we've done that since the early 90s. So we have never seen our market go down.
But we had a lot to go down.
We had a lot to go down for sure. So
this all happened in 1 month.
Absolutely. And this year we're flat. We're up 0.9%, 1%. We're flat this year, and we'll probably end very flat. And when I say flat, between 0 and 2% is very flat. Even down 1% is very flat. Where should we go the year after? I think once the rates come down, if they do come down 1.5 points, which is great news, if prices start to skyrocket, Ottawa's usually anywhere between 3 and 5%. We could be between 4 and 6, maybe 4 and 7% increase, which if you're at the lower end of that, 4% is not terrible, 5% is not terrible. When you get into the double digits, that's when it becomes scary. Yeah. We went up 50% in 2 years.
That's crazy.
That's insane. If we went up 10%, it wouldn't cripple, but it would. I would not like to see it go up 10%. I'd like to see it in the normal Ottawa market, 3 to 5, maybe 4 to 6, 7, something like that, and that would be sustainable and that would be good and affordable.
But everything I'm reading is saying that the fall and especially into the spring market is going to be insane.
Well, I think it will
We've had a lot of people sitting on the couch for a long time now.
But keep in mind, our prices have come down. I'm working with a guy right now, one of our listings right now, where he's got his house priced at, $900, and we're now doing price reductions, and it could sell in the $850 range. That same house 2 years ago was $1.1 million. Yeah. So our prices have come down. So if that $850 house goes up to $925, $950, is it really crippling? It used to be 1.1, right? So I think that our market still will be sustainable for young people to get into the market. I think it'll be affordable, anytime you're trying to, buy an entry level home in the 4s, 5s, 6s is always really, really tough. But, Frank will tell you, the percentage of parents that are helping their kids right now is
over the top.
Is what, 30, 35, 40?
35%.
Yeah, it's insane.
Yeah. So there's other news came out this week. We haven't even touched on it yet. And first-time home buyers will be very happy with the news, with the other news that came out this week.
Yeah, exactly.
Yeah.
521-TALK, 521-8255. We'll find out what Frank's talking about when we come back. I know.
on News Talk 580 CFRA.
Welcome back. Paul Rushforth is here. Frank DePaulitano's here. Hey, by the way, are there any Clement homes left?
We had a flurry of activity actually over the week, especially with the $4,000 bonus we were given on the condos in Ottawa and the $499 townhomes in Rockland. The $499 townhomes are still there because we had to sell 15 of them. So if you still want a townhome, 3-bedroom townhome, backing onto the Rockland golf course, GoGolfRidge.com. GoGolfRidge.com. We still have a few $499 townhomes available. So
sounds like a football team. Go Golf Ridge.
Go Golf Ridge. You know what else we have before we get to this caller? Is Greg has his house on the market for sale. Maybe we should.
Wow. Who did you list with?
You know what I said to him? He's like, I'm going to list my house. And I said, well, let me know. I'll get a photographer in. Yeah. So,
how much Photoshop did you do?
Not much.
So, Greg, give the address and the price and tell us a little bit about your house.
So, domain is 57shortroad.com. That's the address, 57 Short Road. It's a 3-bedroom, 2-bath bungalow in Arnprior. For sale, $549.9 is what it's on.
You want a nice bungalow? It's a very nice bungalow, too. And Greg even staged it himself. You can tell it's staged by a man, by the way. No,
you definitely can.
But you got rid of all the toys, though, right?
Yeah. So if you're looking for a reasonable bungalow in Arnprior under $550, that's what is it? What was the domain again?
57shortroad.com.
There you go.
Speaking of Arnprior, let's go to Mike in Arnprior. Hello, Mike.
Mike, you going to buy this house or what?
No, I got an existing mortgage I just want to protect. It's probably not a smart question, but I don't trust my financial institution not to give me an honest answer. So, unfortunately, postal codes are being changed in Arnprior, maybe all of Arnprior. I don't know, because of the growth. I was just wondering, would that have any effect on an existing mortgage? Because I don't want to touch it till next August.
No, not at all. And if your postal code changes on your property, you just inform the lender. Most lenders will go onto the Canada Post website and confirm it anyway. So if Canada Post is going to officially change it, then they're obligated to change it because otherwise if they're mailing you, well, no, but if they're mailing statements out, now I don't know how long Canada Post will redirect your mail, but just in case, I mean, nothing wrong with letting them know that it's changed. But
would it change if it went rural as opposed to?
Well, from an appraisal standpoint, sometimes appraisals are needed if a property is listed as rural versus suburban. But I don't think you have anything to worry about on the mortgage. Your mortgage contract is intact for that specific home, regardless of whether the postal code changes or not. And I hope your financial institution didn't tell you that would impact your mortgage.
No, I'm just trying to do due diligence.
Yeah, okay, good.
I just don't trust them at all.
Yeah, I hear that a lot. These days.
But it's
and yet you stay with them, Mike.
We got to reevaluate. Everything changes, and I'm pretty sure. I was wondering if you'd say is based by the lot number or roll number.
No. I mean, it's for tax purposes. Obviously,
they go by the PIN number.
The roll.
Don't they?
The PIN and the roll is based on your tax information, but the postal code is basically for mail. That's what it's for. The postal code. So. Has nothing to do with your mortgage term. And the fact that, I sense you've got an amazing interest rate that you took out 5 years ago that matures in August. So the good news is that in August, don't expect the rate that you have. You're probably in the ones right now. But there could be a good chance that the interest rates will be in the threes and hopefully low threes by the time that we get to August.
A few more half cuts. You never know.
A few more half cuts. I think we're going to see significant cuts, like I made the bold prediction, which it is bold, even though Paul doesn't think so, but it is, of half, and half, because it's outside of the realm of what Tiff Macklem has done. Nonetheless, even after those three halves, I don't think that means it's going to stop. I think it's going to continue to come down, but maybe it'll be a little more gradual at that point, depending on what the numbers, the labor numbers are. With the inflation's number 3 on the list now. So where inflation was number 1, inflation's now number 3. All markets in the world are looking at labor markets right now to determine how much to drop their rates and how quickly, and GDP. So those are two major factors right now that determine what's going to happen with interest rates.
But it was not. It was definitely not a dumb question. I think it was a great question. Yeah. But like Frank said, it's. I would just inform your lender basically just for mail purposes. It's like you said.
That's all it is.
Yeah, it's not going to impact anything to do with your property. I just inform the lender. But hey, listen, anyone who lives in Arnprior that has this happening right now, you might as well listen to this and call your lender and just do your due diligence. Yeah, change it.
Yep.
Perfect. Thank you very much.
Awesome.
Thank you, Mike.
Awesome.
Why would they even do that? Why would they change postal codes like that?
Well, it's growing.
Maybe they
right?
ran out, yeah.
Yeah, it's growing, and I think they're just rejigging everything.
It is growing, and that's why Greg's house is a good buy right now, right? It's totally.
If only I had a website I could go to look at it.
What was that again? The website was what again, Greg?
57shortroad.com.
57shortroad.com.
But you know, an expensive hour for you, Greg.
But you know,
these don't come free. You know.
Yeah.
You know. I just actually got a text on my phone with someone looking at 57shortroad.com. But you
Petra?
know what? But yeah, Petra. Yeah. But you know what? Yeah, and why is she looking? Why is she looking alone for herself? I don't get it. You know,
she wants to take advantage of that 30-year amortization.
And the message actually said, "I'm getting ready to leave that lump of a man, and I need something in arm prior." But speaking of arm prior, during COVID, when people were moving to the outskirts, and we saw such an uptick in people in especially arm priors, the Pakenhams, out east, and the Ombrers and the Rocklands and the Castlemans. Arm prior was considered the number one fastest moving, I guess you call it a community. Well, we could call it almost a city now. Number one city in Canada. Like it was the most popular city. Yeah. It was insane.
Even though Greg lived there.
Well, that's why it didn't go as fast as it should have went, because Greg lived there. It's much like Stittsville with Frank and Stittsville. That area should move way quicker, but Frank lives there, so it just kind of plateaus.
I don't see a lot of for sale.
We're dragging it down, are we?
So, yeah, there's not a lot of for sale signs. So once they move in, they're staying there.
Yeah. All right, let's talk amortization.
Yeah, let's talk the big announcement this week. Krista Freeland, Department of Finance, early Monday morning. Surprised everyone, and I do mean everyone, not only Canadians, default insurers, lenders, like everyone had no inkling this was coming down. And crazy is that there's a number of us, there's about 15 of us that are scheduled to go to Parliament Hill this Tuesday, and we're still going. And our goal was to try and get, that number raised, the 30-year amortization. So we've had to rejig a little bit. We're still going there, but now we'll talk about a few other issues that are out there that we'd like fixed. But listen, to go to a 30-year amortization, again, there's still some gray areas there because...
tell everyone what it is.
Anybody on a new build.
So anybody on a new build can get a 30-year amortization. So whether you're a first-time home buyer, second time, anybody can get a 30-year amortization if you're buying from a new builder. Now, home construction in Canada is down 22%. So again, when she originally announced this back in May or June, that it was only for first-time home buyers, she was hoping that would get the market rolling and builders starting to build more. That didn't occur. So she had to... How long have you been doing this, Steve?
How's your head, Steve, on that one? Clonk.
Fist.
Clonk.
Punching the microphone.
Yeah.
And so now, so home building hasn't increased. So let's make it for everybody and hope that, that'll entice. But what she's not realizing is that it still costs a lot to get a shovel in the ground.
We saw that last week.
Yep. Yeah. Land is still very expensive. There's still a lot of red tape that goes on. So you got to fix that before you expect builders, because builders need to make a profit. And they know that there's a price point that Canadians are comfortable with. And if building a home is not in that price point and it costs more, they know that they're going to probably be sitting on some inventory.
Well, you saw last.
You build?
Yeah, you saw last week when we had Charles Clement from Clement Homes in here, and we actually asked Charles. We're like, Charles, they say it's now easier to build. The government's saying, oh my God, we're getting shovels in the ground. Builders we've taken rid of all the red tape, and Charles, as a massive builder, actually said, no, it's not the way it is. He goes, it's torture for me to actually get these homes built. He's lucky he's connected, but it is hard for him to get these homes built.
Another part of that announcement, first-time home buyers can get a 30-year AM on anything.
So first-time home buyer
on
can
resales
get
as well. We'll talk about that when we come back.
Yeah, because
521-TALK, 521-8255. We will be right back. Welcome back to the show. All right, 30-year amortizations for all first-time home buyers on anything, resale or new now.
Resale, new build, anything. Or if you've been through them, again, we think the existing rules are going to follow through. Again, there are lots of gray on the announcement, so we'll get more specific details. By the way, they don't go into effect until December 15th. So had a client call me this week and
they
say...
have to be approved too, right?
Well, of course. Yeah, they've got to pass. But had a client that called me and said, Frank, we bought a house December 1st. Can I move it to December 16th and get the 30-year amortization? Unfortunately, the answer is no, because it can't even get approved until December 15th. So there's no way that it could get approved on the 15th and fund on the 16th. So reality is that anybody that's buying a home that wants that 30-year amortization, you need to have your closing date well into January, probably second or third week of January. Because, again, of all dates she picks, December 15th, right before Christmas holidays, when banks and lenders are shut for most of it, or people are away on holidays. So,
but think about what this is going to do for the real estate market.
Oh, I know.
I mean, first of all, we've talked about absolutely.
Yeah.
But first of all, we've talked about first-time home buyers have been out of the market for a while now because of the interest rates and the rising prices in homes. So now we're having this come in that really benefits a first-time home buyer. 30-year amortization we have 20, 30, 40-year-olds listening to the show. So for the young people who don't understand what that means, it means your payment's going to be more affordable. Yes, it's going to take longer to pay back, but your payment's more affordable.
And you're going to be qualifying easier.
And you're going to be qualifying easier. So prices are down right now. Rates are coming down. Prices will go up. And that's why I'm saying first-time home buyers, they're giving you – oops, that's my phone, sorry. They're giving you
first time on the radio.
Actually, you know what?
Don't let us interrupt you.
You know what? This is a lead on Greg's property, so I should have answered that. But anyways, with the rates coming down, prices going up, they're giving first time homebuyers every incentive to get off the shelf and get back into the market.
Spring is going to be crazy. I'm telling you.
I do think so as well because this really helps as well. They're giving first time homebuyers sort of like the trickle down effect of like, listen. We're not only going to give you this 30-year amortization on new builds and anything, and we're now going to drop the rates for you. Get in now before the prices go up. Now, a seller, we've had tons of sellers this week are like, okay, Paul, I hear you on the radio. You're saying, buyers get in because there's not a lot of buyers and prices are low and that. Why would I list right now? Why wouldn't I wait? And I've already said this at the start of the show. First-time home buyers are about to come back in droves. They're giving them every incentive possible to get back into this market. Rates, as Frank said with his bold prediction, are coming down potentially 3 half drops. That's 1.5% by January, which means, Steve, you are right. Spring is going to be crazy. And our spring market starts January 10th, 15th, once the Christmas tree goes away and things are...
And maybe even earlier.
Maybe even earlier. Like you mentioned, it could start in December. It very well could start in December. Our spring market, don't get caught, excuse the term, and some listeners will not like the term, but don't get caught with your pants down. Like we did in 2021 at the end of the year.
I'll never do that again.
Yeah, But you know what I'm saying? Like, don't get caught waiting for this market. And I have so many people. I mean, I'm dealing with a client right now who is a radio show listener, but I'm dealing with someone right now who's like, no, prices are coming down. I'm going to wait. Guess what? That home you're waiting for is going to be out of reach then. So don't do that. Get into the market while you can. I don't care if you're a first-time home buyer.
And while you have good choice.
While you have good choice. I 100% agree.
Like you can take your time.
Yes, we're seeing.
You can put in conditions.
Listen,
now.
I get, I've said this before, but I get every feedback from the company. So all our listings, and we have well over 100 listings, thanks to Greg's shooting, but we have well over 100 listings, and I get all the feedback. So my phone constantly goes, and I read the feedback. And I would say a good majority of the feedback is, love the home. I'll give a plug for Greg. Photos were unbelievable. And then
photographer even better.
Yeah. And by the way, his house is for sale. And then, imagine living in a celebrity's home in Arnprior, like the celebrity photographer. But anyways, let me get back to my story. What was I talking about again?
Shiny thing.
Yeah, shiny thing. Shiny objects. I don't even remember what I was talking about. What was I talking about?
I told you forget
we
more than you remember.
Yeah. Well, whatever I was talking about, do it.
You're talking about first-time homebuyers getting in.
Yeah, like it's now the time to get into this market before it's too late. Oh yeah, in 2021 at the end of the year when we were telling people get in because the market was going to take off, it took off. We didn't predict 50% increase in 2 years, but it did take off. You're now saying it, Steve. It's going to go insane. Man. Frankie's saying we're having a bold prediction of 3 drops. I'm saying it's going to go insane. I listen, if you're a seller, get in now while you can. And if you're a buyer, get in now while you can. It's the time to get into the market.
If you're a first-time home buyer, is it worth a call to you to see what the qualifying changes will be
For sure. I mean, we can do it effective December 15th. We can do it today.
No, just so I know.
Yeah, we can do it today and say, here's so when we pre-qualified you. So the buying power will likely go up about 10% with this change.
Wow.
So pretty significant buying power increase. So all of a sudden you're looking at you can only afford a $600,000 home. Well, now that becomes $660,000. That's pretty good. I mean,
massive,
right? Like, if you're looking for a 400, now it becomes 440, 450. So, there's sometimes it gets you into a different category of a home, which is really what you were hoping for.
And when you combine that with the rates coming down as much as they're going to,
then your buying power will continue to go up. We've already seen buying power go up slightly with the prime rate adjustments. Again, I think the goal of prime rate coming down by 1.5% is to hopefully line up so that choosing an adjustable or variable rate mortgage makes more sense, because right now there's the gap. I mean, there's anywhere between a 1 to 1.5% gap where it's more expensive to take the adjustable variable, and it's scaring Canadians away, specifically first-time home buyers who are just barely qualifying. So they're forced to take that 5-year mortgage that they're not going to be able to get out of, because the penalty is going to be excruciating to get out of it. So they're going to be stuck in it while everybody around them is getting an interest rate. If they wait a little longer to buy, or if their mortgage comes up a little later, they're getting 1.25% less for a 5-year fix, and that's disheartening.
Steve, Frank, let me ask you a question. I know this is probably one of those answers that's going to be up in the air, and you may not be able to answer it, but let's say Steve meets a nice little old Betty and would like to buy a house together.
Uh-huh.
Shoot me now.
Steve. Oh, by the way, Steve is single, everybody out there. Steve is single, 521 talk if you'd like to talk to Steve. He is single. But anyways, to make a long story short, Steve is deciding to buy a house.
Right.
But the young lady that he is about to buy this house
hopefully not too young.
Well, hopefully, but
she's going to have to be.
well, for Steve, if she was in her 60s, would be too young. But anyways, so Steve is about to buy a property, and the lady that he is getting together with has never owned a home before.
We think.
Is that a first-time home buyer?
We think it will be. We think as long as
even
one
if
of the parties
are on the mortgage.
As long as one of the parties is a first-time home buyer, they'll qualify. We believe that's going to be the case, but we want clarification of that. We don't want to assume it because it may not be the case. So that's the kind of stuff that, as much as they came out with their announcement, now there's a 2-3 week period where they're going to meet with the default insurers, meet with some of the lenders, and come up with the fine print, and then be able to announce it. So we're not going to
Wouldn't it have been smart to do that first?
It would, except for it would have taken away the thunder. I mean, some say the reason the date happened and the announcement happened on a date was for political reasons. Others just say that she just realized that we need to help Canadians. Like we are, I think it's too late coming, personally. Yeah. I mean, it's way too late coming. I mean, it's, our association, we've been talking about it for months and probably years, that 30-year amortization shouldn't be frowned upon. There's nothing wrong with having a 30-year amortization, because when you really think about it, if you're trying to gear to first-time home buyers, well, they're in their 30s likely when they're buying. I mean, in smaller centers in Canada, you could be in your 20s and afford it, but in most major centers, you're in your 30s. So what's wrong with having a 30-year amortization? And to me, it never made sense how you're buying your first home and you can only get a 25-year amortization, but the minute you get to 20% equity, now you can take a 30-year, but the chances are that most people that are in that range are in their 40s and 50s. They can have a mortgage for 30 years, but somebody who's in their 30s can only have it for 25.
Plus, there's nothing stopping you from putting down more on it anyway.
Never, ever.
So that is good news, actually, because if you have someone that you meet who's a first-time home buyer and you're not, there's a good chance you qualify for that.
If it happens that way,
because I actually saw, while we were talking, I saw Greg. He was over there on his phone. He was actually changing his Tinder profile. And he is now not only looking for a brunette, a tall brunette, but he's looking for a first-time home buyer as well. So he's able to buy a home and get that first-time home buyer.
Don't get in a relationtion for that,
well,
please.
Lawyers
are loving you right
Lynn,
now.
help me. Bail me out of this. Hello, Lynn.
Hi, I'm too old for Steve, I'm not interested.
Frankly, I'm not interested.
I love it.
I don't. Have you seen how good-looking and charming this man
That
is?
the line of the show, Lynn.
Okay, I have a question for Frank.
Yeah.
I have recently, after a very long time, trying to sell my home because it is a niche property. Mm-hmm. Someone is buying it as of November 25th.
Oh, good.
Yes, I'm so relieved about that. But at the moment, I will be homeless. Someone had a property where I wanted to be a house in a little town. They put it on the market on last Thursday. I went Friday to look at it. Mm-hmm. We offered that night, and for that date. And she right away came back, yes, but she wanted a month earlier.
Okay.
And I said, and then so the next day she got another offer that was not as good, but I guess the date was met.
Okay.
So anyway, we went back again, and I guess she has accepted the other offer conditionally, until they get their ducks in a row. I guess I've got till the end of the month or something.
Yep.
But anyway, here I offered to rent from her for a month or two. I offered her to come up in the price by $5,000. And no, she did not accept. So I called my TD bank I've been with for 65 years.
Yep.
And would they give me a bridge loan? No, because I wasn't getting a mortgage.
Correct.
So then I could have applied, but it's too late to apply for
home equity line of credit. So that's a way of getting around not getting a bridge loan. You can do a home equity line of credit. And depending on how much you qualify for, so you would use that to cover you for the month. And then the offset would be a bridge loan, because now that you're getting a home equity line of credit, you can do that. But then, I've got other customers so it's hard to get pricing on this, because you go to lenders and they kind of, something like you've experienced, where they kind of dance around what they can do for you. And I struggle with that as well when I reach out to lenders. There are private lenders out there that will do a bridge loan, no strings attached, but it's a 1% application fee. So if your bridge loan was for $500,000, it would cost you $5,000 plus the interest cost for that time frame. So, it's a more expensive way, but it's a guaranteed way of getting a bridge loan. So depending on how disappointed you are as to whether you want that house, if you really, really, really want that house, and, I'm taking it, you don't have a mortgage on your existing home?
No, not at all.
So if that's the case, I mean, you could have, if you really wanted that home, you could have accepted the closing date, and we could have gotten you a bridge loan. So I'm surprised that she didn't accept, or the vendor didn't accept the $5,000, because that would have offset their mortgage. Exactly. So 6 of one, half dozen of the other. You pay it on a bridge loan, or you just pay it on the purchase price. So that's disappointing.
And they have an open mortgage, so it can be paid any time.
Yeah. So unless they didn't. Who knows? I mean, it's hard to say why they accepted one and not the other one, but hopefully there's something better out there for you, though.
Okay, but it is possible.
It is possible, 100% possible.
Because 3 years ago, when I was trying to sell it then, I gave it up. But I went locally to a mortgage broker because I put an offer on a place conditional.
Yep.
And at that time, what was the interest rate 3 years ago? Not very much.
Very good.
Yeah.
Much better than they are today.
Okay, but I was asking for $600,000, and their fee for just the privilege. It was almost $10,000.
Yeah. No, you can do better than that. So you can do much better than that.
And $4,200 a month that's not something I can afford.
No, you're right. You could do better than that. And we've seen some changes with some of the private lenders on the bridge loans too that are much more affordable. So feel free to give me a call if you want to discuss it in further detail off the air.
Thank you, Lynn.
They're saying that $5,000 would be probably, that's what I would have given her. So she's not getting it, but you will, or whatever.
Yep.
Okay.
Okay. Thanks, Lynn.
Thanks, Lynn.
521-TALK, 521-8255. We will be right back.
On News Talk 580 CFRA.
Going back to the show. Okay, one of the other changes we haven't talked about yet is from $1 million to $1.5 million for insured mortgages now.
So, again, on the surface, if you live in Ottawa, I'm thinking not many first-time home buyers.
You're not buying a place for $1.5 million.
Likely not buying something for $1.5 million with less than 5% or less than 20% down.
Toronto,
yes, Vancouver. So that's intended for there. But what we don't know yet, and again, we talk about the gray areas. So right now it's 5% of the first 500, and then 10% of the rest, because it's up to $1 million. But now that it's a 1.5, does that change 5% of 750, 10% of the rest? Like again.
So why did she pull that out and not give the rules behind it? Yeah,
because again, many people say, and it was for political reasons that it was done on that day.
Just to make a splash.
There was a splash specifically on that day because there were events happening on that day. But ultimately, I think, again, the conversations with the default insurers, with the lenders, will have more detail probably in 3-4 weeks from now. And again, it doesn't launch until December 15th.
At least we know what's coming.
But I'll tell you, sorry, Paul, but I'll tell you the other reason where it becomes critical, that 1 to 1.5. So right now, banks have a conventional mortgage and a high ratio mortgage, and that's it. So if you're high ratio, less than 20% down, you get what they call insured rates, which they never had until the non-bank lenders were eating their lunch on the insured mortgages. So all of a sudden they came out with that. But non-banks, which again, many of them are backed by the big banks, they have insured, insurable, and conventional. Insurable is a scenario where you'll take a 30-year amortization, which is good because before it's only 25, so now it's 30-year. But your house is worth a certain amount, and your loan to value is 65% or less. So this really works out well if you're moving your mortgage from one institution to another. When you've got that scenario in place, the interest rates are significantly better because the pool of money that they use to lend is much more aggressively priced. So therefore, consumers will win in that scenario because they're going to be able to get insurable mortgages without paying default insurance, because behind the scenes, the lender pays the default insurance, but they're able to sell it and put it in a fund that is much more aggressively priced. Therefore, the Canadians win because they'll get a rate that's usually about 1/4 to 0.5% less in that scenario versus a conventional mortgage, which is what the banks offer.
Will the premiums go up now for default insurance?
We don't know. We don't think so.
They did last time, though, right?
Yes. So if you went to a 30-year amortization, it's 4.2. On a 25-year amortization, it's 4%. So do we think that's going to stay the same? We really, really do. We hope it does. We hope that there isn't an additional cost to Canadians because, again, it's defeating the purpose of trying to help Canadians, specifically first-time homebuyers, get into homes. So if you're going to increase the cost, then you're defeating the purpose. You're penalizing Canadians when you should be helping them.
I know this show's all about real estate and mortgages, but we're getting to the end. So I want to talk about something that's near and dear to my heart, Frank's heart, and your heart, and Greg's heart.
Everyone's heart.
Yeah,
really.
is a very well-respected mortgage broker, just like Frank, Adam Cote, and of course everyone knows Angie Poirier, what their kid Nash is going through right now with cancer. He's in Boston right now for treatments, and the most amazing story broke out yesterday where Ryan Reynolds, who follows the story, good Ottawa boy, good Canadian boy, he follows the story, and he's been texting back and forth with Angie, and he's like, I'd really like to meet Nash. And Ryan Reynolds, of course, everyone knows, is a beautiful Canadian actor and just an amazing human. He actually flew to Boston. He said, "Where do I meet you? At the condo? Do I meet you at the hotel? At the hospital? Where do I meet you?" And I guess Adam said, it'd be really nice if you came and Adam maybe walked him to his treatment because he's going for his treatment. And Ryan Reynolds actually came to the hospital, no bodyguards, no security, nothing, just Ryan Reynolds, and sat with Nash. And of course, everyone assumed, he's coming, having a picture, 5 minutes, shake the hand, get out of there. He spent an hour with Nash, and he actually said to Nash, he's like, my phone keeps blowing up. This guy keeps calling me, is this Hugh Jackman guy, and Nash is a huge Deadpool fan. And so they FaceTimed Hugh Jackman.
Wow. Which
was the coolest story ever. And you should follow Angie Poirier or Adam Cote on Instagram or Facebook to follow this story, because tell me, to be honest with you, I'm a massive Ryan Reynolds fan now, massive, because of what he did, but it lightened the day for this young 8-year-old who's going through just the worst scenario ever. So listen, our heart from the four of us, our heart bleeds for Nash and the family, and our thoughts and prayers are with the Cote family and little Nash.
Day, though, huh?
He had a great day. He had a smile on his face. He cried as soon as Ryan Reynolds left, but it was just something that the horrific thing he's going through right now, he was able to smile, which was so nice. So
that's fantastic.
Yeah, thoughts.
And
for the
I like
Cote
that he
family.
shows up with no photographers or anything.
Nothing. He didn't. It wasn't
Nash.
It was all about Nash, and he actually said to Angie and Adam, he said, "You know what? Thank you." And they're like, "What? Thank us?" And they're like, "I needed this as well."
Yeah.
So obviously everyone's going through something, and this was a beautiful moment in both of their lives. So
fantastic.
Well, it was great because if he wasn't going to show up, then they had Paul as a backup, and there's a little bit of a difference.
I guess I'm no celebrity anymore. What the hell?
Trying to make his day.
Yeah, make his day, not hurt his day. Yeah.
So no
Birthdays.
Yeah. Our best friend Lily Mariano Dinardo celebrating her milestone birthday today. So I won't say the number, but it starts with the same number as you and I. So
30?
50? 50? Yeah, 50. We'll go with 50 now. Happy birthday, Lil. And Brent Babcock, our commercial specialist. So we have a commercial specialist who has lots of connections with all the major banks. So if you've got a commercial mortgage, Brent Babcock is the guy, and somebody that I rely on for his expertise. So happy birthday to Brent, too.
I was so excited to bring the story about the Cote family in Nash that I didn't remember any birthdays to look at it. Greg, is this your birthday? No, Steve, yours?
No, but if Greg was selling his house, where would I be able to look at it?
Greg, where would we be able to look at yours? Celebrity Greg shot over 40,000 homes. Where would someone be able to live in and stay in Greg's room? What's the address, Greg?
You could stay in an unused bedroom.
No, hold on. He's changed his Tinder profile. He's looking for a first-time home buyer now.
Quickly.
57shortroad.com.
Have a great week,
everybody. Have a great week.
Support local business and charities, everyone.